In today's video, we're going to be focusing on some of the inefficiencies within capital markets.
Specifically on payments, as payments is the lifeblood of any financial institution.
When you look at the payments area, we like to broadly break it down into three areas. First is prepayments, second is payments, and then there's the post-payments. So let's focus first on some of the issues within prepayments.
Absolutely. We define the prepayments as all the actions and all the events that happen within an institution from the point in time a trade is confirmed to the point where the trade has to be settled.
So the first problem that I would say that happens there once the trades have been happening is the fact that obligations and exposures are building up within the market, and you don't necessarily have a good view into what those obligations and exposures are in real time.
Let's just take an example of two different banks, the Bank of Arjun and Bank of Dan. And this can be Arjun and Dan are trading multiple products. It could be FX, it could be repos, swaps, and several different types of trades. And even within an institution, these are multiple different business lines that are there. So even finding my exposures and obligations within an institution is quite complex. And because these are legally binding trades, that these exposures and obligations are a direct risk that is building in the ecosystem. This is not just a risk for the bank, but for every bank that this bank is transacting with, as well as the regulators.
As you're making a payment, you need to do things like be able to run AML, KYC, et cetera. And the banks have built up these systems over time and spent a lot of money and time and legal expense on making sure that they've got them right. Any solution actually needs to be able to interface with those systems.
So now let's get into payments. Going back to the two banks, at the end of all of these trades, Arjun owes $1 billion to Dan, and Dan owes $1 billion of securities to Arjun. In that particular case, Arjun has an exposure of $1 billion of securities from Dan, and likewise, I have an obligation to pay Dan $1 billion of cash.
Nobody's made a payment yet, so we're not out the securities and he's not out the cash, so it's not that big of a deal yet. However, when we're doing a DVP, typically you either have to use a central settlement venue, or if we're going to do it directly, one of us is going to be taking that settlement risk because you can't really synchronize and orchestrate that otherwise. So I could either send the securities and hope he pays me the dollars back, which I'm probably not going to do with $1 billion, or vice versa. Therefore, that's why these central settlement venues have grown up and are so instrumental to the marketplace today.
And why is that a problem? So let's just dig into that one. You know, the Bank of Arjun and the Bank of Dan have two different systems. So whether I have $1 billion or I have the $1 billion across multiple institutions, that information is local to the ledgers and the risk systems of one bank. And likewise, the securities that I'm owed, I have no visibilities into that. I don't know when I will get it until it actually shows up in my account. So what do? Then there are intrinsic trust boundaries here. The only way to solve that particular problem in the market today is to go through what we call a escrow or a neutral third party. So Arjun and Dan do not trust each other, as they should not. So what do? Arjun funds $1 billion to this central settlement venue. Dan sends $1 billion of securities to the same place. And this is an institution that can hold both cash as well as securities. And the only reason I have sent that cash and the only reason that Dan has sent the securities is because we have to settle. Now let us get into the central settlement venue. These central settlement venues are in most cases batch-based systems. So it is essentially a lot of capital constraints that are placed on the individual banks.
Your balance sheet could be used more efficiently if you can move those assets just in time. So think of it as just-in-time funding.
Now, while this is said, it is not all the cases when it goes to a central settlement venue. In some cases, they do make payments to each other. They do make two FOPs, or free of payments. You know, essentially, when you think about this, this is a delivery versus payment.
So one of the problems in post-payments is the fact that you need to be able to reconcile every transaction versus every payment in order to put those monies or those assets back to work again. And when we're talking about the Bank of Arjun and the Bank of Dan doing one transaction, that's quite simple to do. But when you're talking about huge multinational institutions that are doing hundreds of thousands, if not millions of transactions every day, that process becomes quite complex. So it's actually T+1, or the next day, typically, before these assets can be put back to work again. In the meantime, they're actually paying cost of capital on those assets. Getting those assets where they need to be, again, more quickly, that should be the focus of that post-payments.
Absolutely. The last one of this in the post-payment space is the reg reporting. at the end of the trading day, you have to actually make those reg reports available to the appropriate regulators in various jurisdictions. So in the prepayments, we look at it as everything that you have to do from the point the trade is done before it's actually paid out. The payments is the actual act of clearing and settlement of those assets. And the post-payments is the reconciliation and the reg reporting that comes after that. You need to think of this entire spectrum of it. And we think that there is a way to solve these problems today while fitting in with the existing infrastructures of the bank, while also making sure that you're ready and you have an infrastructure that is capable of handling this for the billions of events that a capital markets infrastructure needs to handle. So that is the ecosystem that we're dealing with overall in capital markets in the post-trade space.
Thank you for joining us. Please join us next time.
Any questions or topics you'd like us to cover, please comment below or reach out to us on our website or on social media.
Bye-bye.
Thank you.